Hello everyone and welcome to Neosystems webinar today, Cracking the Ice, Ensuring a Compliant Incurred Cost Submission. I'm Brian Giblin, Product Manager here at Neosystems. I'll be one of your presenters today. First I wanted to mention DCAA audits over 1,600 government contractors and their incurred cost proposals each year. And the forecast is for more, not less. Today we're going to share with you some information that will help to mitigate the risk that your audit will result in an adequacy letter. For our agenda today, first I'm going to go through some brief introductions. Then we're going to get right into the incurred cost proposal itself. We're going to talk about who needs to submit one, as well as the consequences of noncompliance. Then we're going to look in the ICE model and take an in-depth look at each of the schedules, as well as best practices and tips as you go about completing it. We're going to look at reporting applications and how you can use them to make this tough job just a little bit easier. Finally, we're going to look at how you mitigate your risk of receiving an inadequacy letter. Then we're going to open it up to your questions. But if at any time you have a question, please feel free to put that question in the question box so we can get to it during the presentation. So very briefly, who is Neosystems? At Neosystems, we're proud to say, grow ahead, we've got your back office. We provide strategic back office services, including accounting, HR, and IT. And we have consulting services that form an umbrella, including implementations such as GCS, Deltek First, CostPoint. We also do upgrades, like upgrading from CostPoint 6 to CostPoint 7. In addition, we provide financial planning and analysis services, including forward pricing, budgeting, DCAA audit guidance, and of course, incurred cost proposal support. With me today, I have Carlos Alvarado. He's our Vice President of Financial Planning and Analysis. Carlos has 15 years of financial and managerial accounting experience across government contractors and commercial entities. He's been with Neo now for over 9 years, and he leads our FP&A team, who routinely prepare 40 to 50 incurred cost proposals per year. As I mentioned, I'm Brian Giblin, Product Manager at Neosystems. And before I turn it over to Carlos, we'd like to get to know you a little bit better, so we have a poll question for you. Does your company submit an incurred cost submission? For some of you, this is going to be obvious. You're the one who prepares it, so the answer is yes. For some of you, you might not need to prepare it yet, or it might not apply to you, so it might be no. Some of you may be new to your company, or it might not be your department, so you don't know. Does your company currently submit an incurred cost submission? Results are coming in. Close the poll, and let's see those results. Not surprising for an audience attending a webinar on incurred cost proposals that yes, over 80% of you currently submit an incurred cost proposal. Carlos, now I'm going to turn it over to you. Take us into the meat of our presentation.
Sure. Thank you, Brian, for that very good information and also the introduction. Thanks, everybody, as well, for joining today's webinar. I know it's always busy times, and I appreciate taking the time to do that. So to get started, for those, I've noticed that there were some folks that are not submitting currently an incurred cost submission. So I'd like to set the stage, if I can, please, on that. Really, incurred cost submission is reporting basically all of your incurred costs throughout the year in a government fashion, based on what they want you to submit and based on the schedules that are required. It's basically looking at your financials, in looking into your direct and indirect costs, and submitting that based on a by-contract basis and the different cost elements related to those contracts. Now, the question is, who needs to submit one? Well, I'm sure that question is always out there in terms of, well, do I need to do one or do I not need to do one? Well, you got to look into your contracts. You got to look into your into the clauses, especially the ones stated here on the slide. And also being flexibly priced contracts, whether it's a cost plus or T&M, or even when it comes down to any LOE or an IDIQ contracts. So you got to keep an eye out for those for those clauses that will be part of your contract. And also, one of the other things to mention as well is the fact that just because you are required to do one because of the clause being on your contract, you may not need to submit it because you may not have an assigned cognizant DCAA office and an auditor assigned to you. So just because you don't have an auditor assigned or an office assigned to you, that doesn't mean that you don't have to do it. That just means that you have no one to submit it to. So make sure that if you do have that clause, if you are required to do that because of the contract, that you have to do the incurred cost submission. Now, consequences. Well, I mean, of course, no one wants to be non-compliant. One of the things that I recently was released by the Inspector General out of the Department of Defense. There was a report back in March 2013, where, and I'm quoting this, that say, we found that the DCAA did not exercise professional judgment in performing 74% of the sample that they actually took of assignments that were reviewed. Now, that's pretty interesting because that only means one thing, that all they're going to do is increase the level of scrutiny that is going to go onto this audit. And so you got to keep that in mind. So with that, think about the penalties. Think about whether, if you're not submitting those, if you're receiving those letters of inadequacy letters, pay attention to those dates because those dates mean something. They're not just there just because they're there. So, and also the risk of the likelihood of any future audits, not only on incurred cost submissions, but all the different audits such as maybe pre-award audits, post-award, system audits, even fraud checks. I mean, I'm sure a lot of you guys have gone through that. So all of that could trigger that, especially if you're not compliant. Now, of course, DCAA provides an avenue to give the contractors a way to make it easier on them, and that it is through the Incurred Cost Electronic model that they offer through their website. You can download them, it's a zip file, you can download them and get that. But it is a template, so you got to make sure that, okay, you got the model, you can do it. That's not just going to guarantee that it's all going to be good, which is the template itself. One of the things that we recommend is that when you look at those into those templates, the template that you actually download, make sure all those macros that come with it. I'm sure you guys have seen that, especially on the latest release of that ICE model back in 2012, June 2012. Those can be confusing. So there are a lot of macros there where you have to, especially on your structure, if you have two overheads or multiple service centers, so you have to kind of apply those macros and it starts, and the spreadsheet starts expanding. So it could be confusing, and if it breaks, you could be into spending quite a bit of time trying to troubleshoot that. So what we say is consider your own model, consider your own template, keep up with the changes, of course, keep up with DCAA releases every year. And the other thing is to keep in mind is to have an internal and external version of that. And that means that in an internal version, keep your comments, keep your notes, keep your validation checks and balances. When you get into the external version, that's the sanitized version that goes out. Now, as you know, for those that have gone through this process, is that it takes years, right? An average of 3 to 5 years, depending on how the visibility into the contract and how large you are, of course, that they're going to go back and audit that. So it takes that long. So I'm sure you're not going to remember the fact that what were the reasons why you did it a certain way. So the internal version and comments and validation notes and things of that nature are critical to put into those models. Now, schedule changes. Well, there have been some changes back in 2012. I'm not going to go through all of them, but the schedules Q and the comparative analysis, and those are now renamed to Supplemental A's 1 through 4. The other one to reference here is the Schedule T, which is the executive compensation, but also has been renamed. Some things to consider and to also note is the fact that some schedules have been taken out, which is great. You don't have to worry about them anymore, which is the Schedule P, which is related to the IR&D and the BNP purposes, and the R, which was related to corporate taxes and things like of that nature. So, hey, just make a note. You don't have to do them. Some other considerations here is modifications to some of the schedules. One thing that you got to keep in mind, and I didn't mention this in the previous slide, is the fact that there are some things that you need to include into some of the schedules. For example, in Schedule J, which is the subcontractor schedule, you need to include information such as the type of subcontract that you have with the vendor, and also include, for example, period of performance for that vendor itself, for that one subcontract that you have with them. Now, one of the things about the period of performance, or even the value itself for that subcontract that you have with them, is the fact that that may not be in your accounting system. I mean, unless you're using a purchase order mechanism that you can track that, that is often not into the system that you can pull out, whether it's through a report or just a standard report out of the system. So that's something that you may have to ask your contracts folks to go back to those agreements, sub-agreements, and maybe do the little digging that you may have to do on that. So something to keep in mind there too. Schedule K, computing any material, overhead, things of that nature, make sure that you also list that in there. That's some of the changes and modifications that have been put into place as of June 2012. Going in a little bit into now the schedules themselves. Schedule A, as for those that do this, have done it in the past. It's a summary of all the claim rates, of course, the pools and the basis. One tip here that we have is to add a column there that actually that you can pull information that is out of your accounting system. For example, the statement of indirect expenses for those that use those reports. They can actually plug those values in there to ensure that the submission itself is validated against what's in your system. It's something as simple as that. I get it, because you can get a report in front of you on your desk and kind of compare that. But I tell you, it does help a lot to ensure that you're aligning and you're taking down everything there. Now, on Schedule B for the G&A expenses, now, in this type of schedules, as we go through the next schedules related to the pools, make sure that you are reporting based on how you're set up. For example, if you have multiple departments, you want to in the different organizations, especially for those that use independent or individual cost centers. So make sure that you have those listed in columns, and of course, totaling that at the end. One of the other considerations here is the service center allocations. A lot of times, what we find is that so you take the service centers, but people actually just put in the values directly onto the schedule. That shouldn't be the case. What you should be considering and doing, to be honest, is to actually have the links directly from the service centers, because as the audits occur and the auditors are actually looking at this stuff, they're going to be able to trace that. They need to trace that stuff down, and they don't want hardcode values. They actually want to trace that through the links. And of course, as I mentioned in the previous slide, have a total column there. Have a validation column, as I would call it, where you have the verification or the validation column where you can have, you can pull the data and have values there as well to compare it against your accounting system. Okay, going into Schedule C, these are the overheads. Same concept, same idea, same recommendation. Have it across, make sure based on your cost centers. But one thing to point out in this is the fact that if you have multiple overhead pools, you can do it two ways. You can have it all in one schedule and make it a little more confusing, especially for the auditors. So instead, break that down into multiple worksheets, meaning multiple schedules. And have a C-1, C-2, for example, as different schedules. Make sure that you're separating the pools in that fashion. And of course, don't forget about the tip to have that validation column there. Schedule D, this is related to the intermediate pools, of course. Again, make sure that you're breaking that down based on cost centers. And also ensure that if you have multiple service centers, that you have multiple worksheets or schedules. But the one thing I'll probably say and highlight in this slide is the fact that you have to examine and make sure that any unallocated service center values or dollars are if there are some, maybe you're looking at a report that you have out of the accounting system, and somehow there's still dollars that were not allocated. So that's something you have to go back and inquire about, whether you need to engage your GL people or your accounting folks or whoever is doing that. Something to keep in mind. And of course, don't forget about the new tip. Fringe, same thing, again, based on cost centers. The one, also, it needs to be in its own schedule, multiple worksheets, keep that in mind. But the one tip that we have here is the fact that, and actually is creating inadequacy letters being issued. It's actually prompting that because of the fact that the allocation of the Fringe pool dollars not being shown onto the schedule. And what I mean by that is, for example, if the overhead pool has an X amount of dollars that that Fringe applies, if you will, then that means that you got to spread that out. So what they want to see is the allocation itself across the various pools, final pools, and also intermediate pools. This is an interesting one. This is one that is nowhere in the ICE model. It's nowhere in the requirements, but they actually asked for it, which is, you ask yourself that question. But okay, unallowable worksheets. It's not a schedule, but we recommend that you do this. And the reason why we recommend that you do this is because you got to break it up between what's G&A and what's non-G&A. Okay, things in terms of non-G&A, any direct costs or any overhead, for example, both per diem and things of that nature. Break that down because of the fact that you have to, when you get into the rate calculations, the non-G&A unallowables should go back into the G&A base. That's a standard practice. A lot of times the accounting system will not do that, and it's not set up to do that. So that's something that you got to keep in mind as you're working on the incurred cost submission. Okay, diving into Schedule E. Now, as for those that have done this, it brings all the pool dollars and all the base dollars and brings it all and calculates the rate. One recommendation on this schedule is to make sure that you have the right description to reflect, as it says here, how your allocation base is. For example, what is included in your Fringe base, what is included in your G&A base, whether it's a total cost input, TCI, as some people may know it as, or value-added cost pool. Making sure that you have the right description there. Remember, don't forget about the non-G&A. It's got to go right into the G&A base. One tip that we have in the schedule, have a tie-out. Always have a tie-out where it takes all of the dollars that you have in Schedule E, takes the non-burden ODCs that perhaps are not part of your Schedule E because they're outside of the rate calculations, and compare that against Schedule H, which we will talk about in the next couple of slides. And compare the two together and have that variance to ensure that, hey, you have accounted for all of the costs as it compares Schedule E with Schedule H. Now, into Schedule H, you're really reporting all of the different contracts, their costs, including commercial contracts. Of course, it's got to go into its own section and grouping. But some additional information onto the schedule is the fact that it's not on the ICE model again. Customer agency, the final agency that needs to be referenced as a column, classified. That's certainly something that also is needed. And again, they're not into the ICE model. One column that we often see that is missed as we are reviewing things for our customers is the fact that the subcontract's ID, meaning that if you're performing as a sub to a prime, there's got to be some reference to that. And you should have some ID number as it pertains to that. So make sure that you have that, and as you can see also in the screenshot below. Continuing on Schedule H, this is a big question. At what level are we going to report this on? Is that at the lowest level where the cost is being recorded? One of the things that we go through and we help a lot of our customers with is recommending that you consider the billing level. The billing level is actually what the government gets anyways. So as the government is reviewing and DCAA auditors are reviewing this, they're more than likely they're going to have those invoices in what is being reported at the billing level. So that's the recommendation that we do for our customers. And that may be at different levels, of course, per contract. So that's something to also consider. One of the other things is make sure that you're segregating the contracts into their own individual buckets, meaning cost plus, D&M, fixed price, and commercial. Don't think that because you are a sub to a prime, that is considered a commercial contract. Make sure that if it is a prime that is a federal contract, it's got to go into the right bucket, not a commercial section. And of course, don't forget about final tie-out against your P&L. This is comparing what the total cost, direct cost, and applied rates are against what you have in your income statement. That is something that is often missed and not done. So that's something that we highly recommend that you do as part of your overall final tie-out. One other, here's a sample of a Schedule H. This is a system-generated reporting tool, system-generated Schedule H. We'll get to some of the things, how you can leverage some of the reporting tools. But here's one example of what type of information you can leverage in a reporting tool to extract out of your system. I mean, imagine your Schedule H, right? It could be thousands of rows depending on what level your reporting is on. So leveraging reporting tools could really come in handy in doing this. Now, Schedule H-1, this is where the government participation across the various pools. It's a simple schedule, but it is often also missed when you have changes to your structure, when you have changes to your pools. Make sure that this is in sync with Schedule H, that they're all aligned properly, and also add a check into the schedule, as you see on the screenshot below, where it actually compares it against Schedule H to ensure all the dollars across all the bases are accounted for. Now, I believe we have another poll. I'm going to give it back to Brian, and we'll go through that. Thank you.
Thanks, Carlos. Yeah, Carlos mentioned a couple of slides back about tying out to Schedule H to your P&L statement. So we want to know, are you currently validating Schedule H against your financial statements? Who's following this best practice and how that's going for you? So if you would take a moment on that poll. Looks like we're getting a good response rate. Carlos talked extensively about validating against the various statements to your financial statements to the schedules. Give you a few more seconds. Close the poll. Well, excellent. Looks like many of you are already validating your Schedule H against your financial statements. Carlos, how does that match up with your experience?
It's interesting because it's close to 20%. I are probably not doing it to the extent that we're recommending it. It's something that I'll certainly continue to push and highlight in terms of doing that validation for those that are not doing it.
Sounds like we got a good crowd out there today, and they're doing the right work.
Absolutely, absolutely. Okay, continuing on. Schedule I. This is another very important schedule, right? This is what you tell the government and you submit this, right, when you're having the under and over billings. Make sure that you are aligning the contracts with Schedule H. We talked about Schedule H, about the different levels, of what level you're doing it on, whether it's the billing level, lowest level, but you know what? You got to be aligned properly. Otherwise, they're going to send you an inadequacy letter saying they're not aligned. So make sure that you're doing that. Make sure you list out all the information such as prime ID and sub ID, stuff like that. The one thing I highlight on this, which is often missed, is the fact that there are two little columns into that schedule. And that's the penalty clause and that's the physically complete column in there. Those are typically and often missed because there's such a small column that do I need to do that or not. So make sure that you are actually flagging them. And there really is a yes or no, why or and really to consider that. One thing here that I want to highlight as well is the new tip here is to develop a process for analyzing the over and under billing variance. If you have $1 million variance, I'm praying that you don't, but if you do, there's got to be a reason for that. And to do that, you got to make sure that you are tracing those variances so that makes sense to you before you submit your incurred cost submission. Schedule 8, J. This is for the subcontractor information. Make sure that you have, of course, the sub ID, the prime number, point of contact, all that stuff. The one thing that we highly recommend is that you have a tie-out on the bottom, as you can see, where it takes what you have in J, and it actually compares to what you have in Schedule H, because they should tie out. A lot of times auditors, if you don't have this, they somehow have a hard time tracing that back. So why not give that to them so they can see it right in front of them that there's a formula there for the Schedule H total of 26 million, that is, and they know how to find it. Trust me, it comes a long way if you do that. Okay. Schedule K, summary of hours. I mean, this is, as you know, this is reporting all of your T&M contracts. Of course, make sure that the hours are correct, that's for sure. But the one thing I want to highlight in this schedule is the fact that the G&A, in the case of G&A, if you are putting the G&A rate or forcing the G&A rate to match up to your billings, well, that's not correct. You need to let the model and have the G&A calculator rate within the incurred cost submission that you're working on actually do the calculations for the G&A being applied. Now, there's a column back in Schedule I that is a contract limitation schedule. So if there are ceilings or some type of thresholds on a specific contract, that's how you use that. Don't force the G&A rate in the schedule because that is not something that it will be correct. Moving into Schedule L, reconciliation of total payroll. Of course, that's your labor distribution, right, as incurred against your 941s, your IRS forms. Make sure that you will have the direct links, of course, from the other schedules. And, of course, all of the accrual variances and adjustments, I would say, rather, in terms of vacation and things like that, and the pre-tax wages, flexible, labor related and things like that. You want to make sure that you are adjusting all of that in the schedule. Excuse me, plus minus 1% variance, it is generally acceptable. If you have a 5 to 10% variance, I highly suggest that you go back and find that variance. You should be doing this already as part of your payroll process anyways. But make sure, I mean, if it's a high variance, you got to go back and look at that. Schedule M, that's a narrative type of schedule. You really are reporting in a narrative manner any decisions, any changes in your organization, any memos issued by the contracting officer. So make sure that you listen those things that are impacting your indirect rates, even especially, right? If they're impacting that, you got to make sure that one example I would say is you add in new pools, right? Maybe you add in a material handling pool. That's something that will go into the schedule. You got to reference that into the schedule. Okay. Schedule N, it's a form. You just got to sign it usually by a C-level executive, usually a CFO. Make sure you use the right date, please. It's often missed where you're taking the last year's submission and moving it over to the new year, and that date is incorrect because you're using the last year's date. Make sure you do that. Make sure you catch that before you submit it. Okay, moving into Schedule O, this is contract closing information. Those are the contracts that have been completed within the fiscal year in question, the ones you're working on. Of course, think about the flexibly priced contracts that they will have to go on to this. One of the things that I mentioned already in Schedule I is that if you're flagging it as physically completed in Schedule I, they got to be in Schedule O. If they're not, you'll be certain that they will be coming back and asking why those things are not aligned properly. So keep that in mind, please. Now we got some supplemental schedules. This is a comparative analysis. This is A1 through 4. Really is across the pools and across also includes direct costs. Make sure that the one highlight here, the one note that I will make on this one, is the fact that if they are, as you compare it to last year, to the previous year, make sure you have explanations and come up with the threshold process where you say, okay, anything over 20%, for example, in terms of a percent change, you have to provide some explanations on, because they will ask for that. So if you let them know what your process is and you are providing those explanations, that is, you're good to go. I mean, you're certainly a lot better than not doing that, because they probably will ask, and more than likely they will do that. Excuse me. Supplemental B, executive comp. Well, it's called supplemental, but it's not optional. You got to do it. I mean, 10 out of 10, that's what they're asking for. at the point of entry, at the point that they're receiving the incurred cost submission. So if you're not doing that, more than likely, they, again, I mean, 10 out of 10, usually that's what they ask for. 3 most fiscal years, recent, and of course, don't forget about the top 5 executives, compensated executives within the company. The one thing to highlight in the schedule is the thresholds, the executive compensation threshold that is usually issued by the White House, and that's from their website. So, and they haven't changed until recently in December. I believe there was a report out that they actually changed that. Make sure that you're looking into that, especially if you're going over the threshold and compensations. And also think about the benchmarks and comparability factors. That is something that DCAA, based on the report about the 74%, remember the IG report said that haven't been done properly. So that's going to be quite a bit of focus also on executive compensation going forward. So that's something to keep in mind. Other supplemental schedules, not to spend too much time on these, but supplemental C, I mean, not often required, but certainly something you should have. But the one to have is the contract briefs. That's something you should be doing regardless of the incurred cost submission. That is something that is not optional, something that you got to keep up with the modifications. It can also be system generated. I mean, if you have the information into your accounting system or your project, management system, make sure that you can also leverage that and have a report that can be generated as well. Okay. Some other, we're now diving into some reports options here. We talked about how it's a lot of information that goes into this incurred cost submissions. A lot of times there's thousands of rows that have to go into some of the schedules. Why not leverage in this case? We in the case of Cognos Impromptu, for those customers or those folks, that organizations that use this system, you can get information out. You can actually create formatted reports that can address some of the schedules. And also, in addition to that, you can also create or develop some reports that can also help you in your validation. For example, having an AR history report to be able to look at what's been billed, right? There's additional things you have to do, but it does help you. Now, another example is Schedule O. For Schedule O itself, this is the contract close that had been physically completed within the fiscal year. That is something that maybe you can write a report that has any contracts at any level, task level that is, claim level, however you want to report it at, and have that include or filter that based on the period of performance. So if it ends within the fiscal year of 2013, then why not have a report that gives you at least a starting point of all of those contracts that you need to have into this report, and then from there do the right analysis and dig in the digging that you'll need to do on that. Now, for those that are using Deltek CER, I know a lot of folks probably on this call and this webinar are using CostPoint and have Deltek CER or Cognos 8 or 10 for that matter. One of the things to consider here is that all major schedules are addressed, but there are things that you have to do. For example, in the incurred cost submission, there are codes set up, there's a code set up in CostPoint that you have to make sure you flag it, right? So there's some tweaking and some changes that you have to do in CostPoint in order for these CAN reports that come out of the package to work. One thing to point out on Schedule J, that's for the subcontractor information, is the fact that if you're not using a purchasing module, for the example in CostPoint, those reports would not necessarily work. There are other avenues on how to develop a report that can get you that information, but some information may likely not be there. But again, I mean, those are the type of things to consider when you're looking at the CAN reports that Deltek provides out of the package, and some changes that would have to do. Regardless whether you use an Impromptu, whether you're using Cognos, 810, CER, Crystal reports, business objects, it doesn't matter. The need to validate in checks and balances, I mean, you got to do that. You can't just trust the data that those reports actually get you. And, you know, of course, in some of the reports also may need modifications as well. So we talked about inadequacy letters briefly in the presentation by Brian when he started. Here are the things to consider and to really keep an eye out for, meaning for Schedule A, for example. Make sure you have all the pools. Just because you just haven't, you have to have the final pools and also the intermediate pools. A lot of times the intermediate pools are missed or not included. You got to have all of them listed. In the Fringe schedule, have the allocations. I've mentioned this early on in the slides where you have to have the Fringe schedule in the allocations reference and listed on the schedule itself. Make sure you have that. For Schedule E, make sure that don't forget about the unallawables. Don't forget about the unallowable worksheet that I mentioned to you already. And also make sure that the non-GNA amounts are actually added back to the GNA base. For Schedule H, make sure that you're not missing those columns, those extra fields that are not in the ICE model. Keep that in mind. Make sure you remember that. But are needed because that's what they're asking for. So ensure that you have those extra columns there listed. Continuing on, some other schedules here, for example, H1, I talked about make sure that you are accounting for all of the pools and make sure that you have the checks and balance in there too. Schedule I already talked about it, the penalty provisions and physically complete flag. Don't miss that. It's something as simple as that, although it may require you to go back and look at the contracts themselves, but those should be referenced. Don't forget about those. Schedule J, the period of performance, and also value of the subcontracts that you have need to be listed into that schedule. Schedule L, I talked about a plus minus 1%. If it's more than that, please go back and reconcile that. Again, you should already be doing that as part of your overall year-end process or even quarterly process for that matter. But make sure that you're doing that. Okay. Now, we have another poll. We're going to give it back to Brian. I think this will be my time. He'll close it up, and thanks everybody for joining today.
Thank you, Carlos. And when we started the program, we asked how many people are submitting incurred cost proposal. And one of the questions we often get from government contractors is, well, how likely am I to get an inadequacy letter? We have with us today, you, our listeners, a very large sample of government contractors. So we're going to be able to answer the question of how likely you are to receive it just by this simple little poll. So have you recently received an inadequacy letter? This will give us a good sense of what the probability is of you getting such a letter after you submit your proposal. Give you a few more seconds. We got a couple more results coming in. Appreciate everybody's time today. And there we have it. If I can round off a little, it looks like about 30% have received an inadequacy letter, 70% have not. Carlos, what are your thoughts on those results?
You know, it doesn't surprise me, Brian. We do get quite a bit of customers that are in need of support in terms of interpreting and making sense of what those letters say. And a lot of times are very simple things that really need to be fixed, and that's why we're sitting here showing you guys, you know, what are the things that you can do to really avoid, and some of them are really simple.
Yeah, and I was just wondering, you know, and are all of those inadequacy letters, I hate to put a point on it, but are they with merit or?
You know what? Sometimes they are, I mean, some of them do have quite a bit of merit, but some of them, no. And that's another point to make, Brian. That's a good point. Is the fact that don't be afraid to push back, because that's exactly what we do a lot of times. Because a lot of times, you know, they're not looking in the right places. And sometimes you have to tell them where to look to. And it's as simple as just say, hey, by the way, look into the schedule. Row, 40, cell, E40, that's what you need to look for. And a lot of times that happens. So that's certainly something that you got to review those inadequacy letters. You got to go back to your submissions and ensure that they all make sense. And if you can push back, please do.
Thanks, Carlos. And I want to highlight for people some other resources if you have questions. while we're getting ready to answer your questions directly. Upcoming, we do have a webinar, direct and indirect cost webinar. It relates very much to preparing your incurred cost proposals. We also have training courses available to you. And we have our blog posts where we blog on various topics, including incurred cost submissions and proposals. Of course, feel free to check out DCAA and the OMB, excellent resources for you to look at. Let's go to the questions now, and so that we can answer the questions that are uppermost on your mind. Of course, one of the questions we always get, and I see it here, is will this presentation be available to us? Yes, we've recorded today's presentation, and we will make it available to you in a few days. What is the definition of an executive? And that was, what was that, Supplemental B? So what is the definition of an executive?
Sure, Brian. One of the things here is really anyone within the organization who's a senior decision maker, typically a C-level position. And don't forget, I mentioned this in the previous slide, the 5 most highly compensated employee in a management position has to be listed into that. Make sure that you have the trend of the 3 running years, previous years also there listed. So, but it really does come down to the executives, Brian. Okay.
And what is the definition of physically closed contract? I recall that was Schedule I, right?
Yeah, sure. That's really any contract for which the work is fully completed, right? And the period of performance falls within the fiscal year. So that may not be, it may not be a fully closed out. But it's certainly something that if the period of performance does end, that's something that you have to consider that.
Okay. If you have multiple fringe pools, do you just add additional schedules to document this? And is there a best practice?
Yep. I mentioned this earlier in terms of if you have multiple pools across, whether it's fringe, overhead, and G&A. Make sure that you have multiple worksheets, meaning multiple tabs in the spreadsheet. So ensure that you have them listed. Don't combine it all together because that confuses the auditor. That even confuses maybe someone that's looking at it a year later. Make sure that you have multiple worksheets or multiple tabs in the Excel file. Okay.
Okay. What if your rate structure does not fit into the ICE model? This person, she's tried making the DCAA model, but it's, as he says, so much trouble, or she says so much trouble, my apologies. She's been adding new schedules, so it looks like their model, and trying to include the model changes and updates. Is this okay, or will I get into trouble at some point?
Oh, boy. ICE model is always giving people headaches. It's such a I mentioned this in the beginning in terms of macros, and it doesn't give a lot of the flexibility. It does allow you to kind of set up the page and set up the ICE model and all of that. My recommendation is always to have your own model, right? Certainly, have a starting point with the ICE model itself, but have your own file, right? Because it's your organization, it's your company that is going to make changes and things like that. So ensure that you're comfortable with what you're doing. And so typically what we do for a lot of our customers is that we have our own template that we use. We don't use the ICE model, but we do take into account all of the changes that are making sure that we're staying up to date with that.
Hey, Carlos, someone's saying that DCAA is trying to tell them that they need to provide the top 10 compensated employees regardless of management duties. Why do they do this?
Because
okay,
they don't know. No, I think it really comes down to making sure that that is a rule, and I'd be more than happy to point you in the right direction when it comes down to those rules. They actually, I believe they are listed even in the manual, the DCAA Incurred Cost Submission manual for that as well. So that's certainly something that should not be the case, and it doesn't surprise me, to be honest with you. A lot of times, a lot of these auditors that are coming on board are lack of a better term, they are not as experienced as some of the others. So it depends who you have as the auditor. So a lot of times you have to almost explain to them and tell them what to look for.
Yep. Here's one, Carlos. I'm completing the ICE model for the first time and find it very confusing. I'd like to get it reviewed upon completion before submitting it. Any suggestions on where to get help with this? I love questions like this.
Yeah, no. Well, a lot of times folks think, well, we're doing all of the incurred cost support, meaning from start to finish. But a lot of times, what we also do is review those submissions that are some of those folks, some of those companies need. So we'd be more than happy to help you with that in terms of just having another set of eyes into your incurred cost submission and point out things that perhaps you could be doing and changing and make sure that you stay in compliance.
How should you handle it if you have, I should have done my incurred cost proposal before, I should have done it in the past, but I did not. What do I do now?
Well, you have two options. One is don't do it, right, and wait until they knock on your door and go back and when they ask for it, then do it, right? I wouldn't recommend that option. I think you got to be proactive. I think you need to go back to those years that need to be done and take the opportunity to do those. You don't have to do them within a week, but I mean, take your time, right, in terms of doing them, but do have them available in case they do ask for it.
Okay. And this is a question regarding CER.
Yeah.
And does every company have access to the ICE schedules in the CER? Is it in the standard package?
Mm-hmm. My understanding, again, I'm not Deltek, so I got to put it out there, is that does come with the standard package if you do have CER. Now, it depends also on the version of CER that you're in as well. If you go back some earlier versions of what it used to be called Deltek Performance Management, DPM, so it really depends on which version you're on. But my understanding, putting that caveat out there, is the fact that it does come with the standard package.
Very good. And what are they seeking when they ask for release to prime and submission received?
What are they seeking? If you could repeat the question again.
Yeah. What are they seeking when they ask for release to prime and submission received, yes, no, on Supplemental Schedule C?
Oh, I think that's probably related to one of the old schedules. I'm not sure which schedule is referenced there on that question. Well, there was one. There used to be one schedule towards the end, whether it's W or X, where you can sign off in agreeing to release your submission to other folks other than DCAA or DCMF for that matter. So that's how that question, that the schedule is for. And so that's something that typically is a no, right? You don't want anybody to look at your financials or your incurred costs. So that's something that you wouldn't be doing. At least that would be my recommendation.
Okay. Does a home office with no government contracts need to file?
Does a home office with no government contracts need to file? I go back to the question about the contract itself. Mm-hmm. It's all about the contract itself. Go back to the contract, look at those clauses in there, especially if it's a cost plus contract, T&M contract, flexibly priced contract reference. You got to go back
mm-hmm.
to that. Regardless of home office or not office, it doesn't matter. I mean, we have plenty of clients that they have a virtual office because a lot of the folks are working into at the government sites, and you still have to submit one. So that the home office facilities, things like that, it should have no bearing into the question about submitting one or not.
Okay. If we're resubmitting a prior year, can we use the new model? Should we use the new model?
What I'm finding is the fact that if you are resubmitting or making changes to a prior year submission, is that DCAA is going to hold you accountable with the changes in terms of the new changes that have come into play recently. So what I would suggest, whether it's a new model or whether it's an adjusted model that you have, ensure that you have those changes implemented into whatever you submitted or resubmitted.
You mentioned about subs, and they should not be considered commercial, but if it's a second-tier sub, are you then considered, is it a commercial contract at that point?
No, I mean, the prime contract is still a government contract, if in fact it is. If it is, then it shouldn't be. And this is one notion that I see quite a bit when people are flagging them and grouping them into the commercial section in Schedule H. And a lot of times they do that, and DCAA comes back and says, well, no, I don't think so. This contract actually is flagged, or they have it in their records as a true government contract, so you have to go back and move it up. Any other questions?
Yeah, there was a reference to, you mentioned IDIQ, indefinite delivery, indefinite quantity contract.
Yes.
What if you haven't gotten any task orders on that contract yet?
Then there's no incurred cost.
Okay.
So there's no incurred cost at all. So from that perspective, is you wait for those task orders to be issued, and then from there you look at the language in those task orders, and then from there you make a decision whether you're required or not.
Okay.
Yeah.
We had a request to show the slide listing who should submit the ICE again.
Yeah, sure, we can do that. We can go back to the previous slides. Can't remember what number it was, but we can go back.
That'd be all the way back.
Keep a reference of the FAR clause, right? That's certainly something that if those contracts are governed by that, and they are referenced into the actual contract documentation, that's something that you have to be aware of. Remember, the flexibly priced contracts, so cost type and T&M contracts. It can also flow down into LOE type contracts. So those are the things that you have to keep an eye out for. But here's a slide for the question pertaining to this.
Okay, great. Thanks, Carlos. If you have more questions, please feel free to email Carlos or me. Anytime you have a question, even if it's just a quick question, please feel to reach out to Carlos and see if he can give you a hand.
Yeah, and I'll be happy to answer. I mean, a lot of times it's just a matter of simple questions, and it would be more than happy to answer that. I can certainly have any of my folks help out with that as well.
Okay. I hope you all found this helpful today. Hopefully we helped you to mitigate your risk of receiving an inadequacy letter. Given that DCAA have done 1,600 audits per year, hopefully we've helped reduce some risk there. Thank you, everyone. Look forward to seeing you again.